Hello and welcome to this special CNBC Africa broadcast. I'm Esther Awuni. It's that time again where Nigeria's Central Bank Governor Godwin Emefiele will outline the position of Nigeria's Monetary Policy Committee in its last meeting of the year. Now let's start by looking at the global environment for monetary policy. Central banks around the world are still in a battle to tame inflation, from the U.S., where market players are still looking for cues on the size of the next rate hike in December after 4 consecutive rate hikes by the Fed. Now to Europe, where policymakers are still split on whether to keep up the hawkish pace and go for a third straight 0.75% increase or switch to smaller increases as recession signs become more evident. And here in Africa, some economists expect the South African Reserve Bank to raise its key repo rate again this week. Meanwhile, Ghana's MPC will begin its meeting today as inflation continues to be stubborn at over 40%. So far, Ghana has raised its policy rate by a record 10% this year. Now, coming back home, Nigeria's Monetary Policy Committee has raised the monetary policy rate by a cumulative 400 basis points, 150 basis points in May this year, with another 100 basis points rate hike in July and the last 150 basis points in September. Now, despite these interventions, Nigeria's inflation in October rose to 21.2%, and the local currency is still trying to achieve some stability at the parallel markets. Quite a lot for the MPC to consider today. Now, to discuss the options before the committee, with me in the studio are Bismarck Ruwane. He's the CEO of Financial Derivatives and member of the Presidential Economic Advisory Council, Abdurrahman Yunusa, a former council member of the Chartered Institute of Bankers of Nigeria, and joining us remotely is Muda Yusuf. He's the CEO of the Center for the Promotion of Private Enterprise. Gentlemen in the studio, thank you for joining us today. And of course, Mr. Muda Yusuf, thank you also for joining us remotely. We have we're expecting the CBN governor to come on at exactly 2 p.m. Nigerian time. In the meantime, we have 15 minutes. So it's the last MPC meeting for the year. It's been quite a year, looking at all the macroeconomic indicators, from inflation to the naira to oil production, oil prices, etc. Bismarck, let me start with you. How would you sum it all up in terms of how monetary policies have tried to tame inflation, have tried to, of course, stick to their mandate this year?
I think they've done as much as they can do based on the information that they have. But again, like they say in economics, nothing is ceteris paribus. Between the last meeting and this meeting, there have been the floods, which actually exacerbated the rate of inflation. Therefore, ordinarily you would have said they've done in terms of moving the policy rate, but also structurally, we moved the general level of interest rates for 90-day treasury bills, 180-day treasury bills, and 1-year treasury bills significantly higher. So it will be time to digest the impact of this on the economy. However, two things. One, the floods, which has pushed up inflation. Second is that if your trading partners' interest rates increase relative to the level of inflation in those markets compared to yours, then you'll be at a competitive disadvantage in terms of the value of your currency. So cumulatively, the U.S. has increased interest rates by this amount, and the U.S. dollar has increased by about almost 17 to 20%. The effect of that means that dollar-denominated commodities have actually fallen in price. So from $125, $126 a barrel, we are now at about $88 a barrel. So there's a revenue problem, there's the inflation problem, and then also there's the fact that there is this shock, which is the floods, which has actually worsened inflation. Therefore, the common sense would say, or conventional logic would suggest, that there is likely to be an increase this time.
Abdurrahman, still taking stock now. What is your take so far on how monetary policy responds to all that has happened this year?
I think the central bank has always been in a bad place. And if anything, this year is even worse because everywhere in the world, you've seen a lot of contradiction in monetary policy and fiscal policy. If you just take a step backward to what happened in the UK in the past 1 month, where a whole prime minister had to leave because of the incongruence between the fiscal policy that they wanted to introduce, which is the rate cuts and all of that, versus the monetary policy issues when interest rates went sky high, up to 6-7%. Okay, you can see how significant it was in a market that reacts very, very violently and very clearly. And first, she sacked the finance minister, and that wasn't enough. Even the prime minister herself had to step down. So it just goes a long way to show that the market, okay, they're the one that tell what it is that is going on. I wish a bit of it can happen around here, where, when policies are put in the fiscal place and it's not working, okay, the effect is felt to the point where people who took those steps actually have to step down to allow other people to try other luck. But back to Nigeria and back to the issues at hand, I think the central bank cannot do much for the rest of this year, essentially because all the things they've done in the past 2-3 months are yet to actually go through the system. And except they are going to create further convulsion in the system, that's when you try and do more. And of course, I sympathize with the position of Bismarck, that given the rate of inflation, the indication is that there should be some further hike in rate. But it's already so tight.
Yes, growth has been sacrificed.
It's already so tight. The information I have is that there is up to $500 billion negative position at the central bank for all the banks.
All right, I need to quickly bring in Mr. Muda. You've been very vocal about how the policies of the CBN have especially affected the manufacturing sector, of course, talking about issues around FX, issues around power, etc. But how would you, what is your take on monetary policy response so far this year? If you could just unmute your mic, please.
A number of concerns that I have. Well, I appreciate the point that has been made by Bismarck and my other colleague in the studio. But there are some fundamental concerns. First, around the diminishing capacity of our banks to play their role as financial intermediaries. That the financial intermediation role has been significantly diminished by some of these policy responses. And this is taking a huge toll on this variable we call financial deepening. If you look at private sector credit to GDP in Nigeria, even by African standards, it's one of the lowest. We are talking about less than 15%. Private sector credit to GDP in many of the African countries is between 30 to 50%. In the advanced economies, it's as high as 100, 150 to 200%. So already, because of some of these policies, there is an increasing disconnect between the real players in the economy and our financial system. That is one. Secondly, the cost of credit is already very high. I'm talking now from the point of view of the real sector of the economy. The cost of credit is already very high. Prime lending rate now will be getting close to anywhere above maybe 20%, 24, 25. And for an economy where we have all manner of headwinds, ranging from FX to energy costs to, consumer resistance to infrastructure, So we cannot afford too much of these high interest rates, And the way it is with credit. Once you are in it, you cannot exit easily because you have already taken the money, and these rates are floating rates. So it's a lot of pressure on those who are entrepreneurs in this economy. Then I'm also concerned that in all the pronouncements of the CBN, even at the MPC, there has been no clear statement or expression of concern about the disparity in rates between the official window and the parallel market window. That is a major issue for this economy. So it bothers me a great deal if the CBN still keeps saying that it doesn't recognize the parallel market. And yet we have a major distortion in our economy. arising from the management of Forex. So all these things bother me. Well, what is desirable is for, these rates to remain the way they are for now,
Right.
in my own view, because as far as solving the problem of inflation, I'm not seeing much results around that.
Right. Please hold that thought for us.
But what is likely to happen is what Bismarck has said.
Right. Thank you so much for those remarks. Well, Mr. Mark, like Muda said, the parallel market is a market the CBN continues to say that it doesn't recognize, but we know that many of our manufacturers, business owners do go to those markets. So we have two scenarios here, a hold and a no hold. So Bismarck, let me come to you. I think we have about 5 minutes before the CBN governor comes in. What first scenario, if the CBN does decide to hold, what does that mean?
Hold means that status quo remains and that we'll just atrophy along. If we hold and then the US increases interest rates, the European Union, the British increase interest rates, then you'll find that whilst the US inflation has actually declined from 8%, in fact, as high as 9.1, and all the way down to 7.7, and they've increased interest rates, the interest rate inflation differential, which determines the currency value, right, would have worked against us. So we've been in a negative competitive position in our exchange rate our interest rate relative to the US. It means the Naira will weaken significantly in the parallel market. The same thing will happen with the Euro. The same thing will happen with the British Pound. The same thing will happen across. So you're not doing it to solve the problem that you have. You are doing it. You are doing it. You are doing it as a strategic move in anticipation of what is going to happen after these currencies move. Don't forget that all the other countries are doing the same thing. All currencies are under pressure. Nigerian currency is not the only currency under pressure. But when we analyzed the causative factors, the inflation stoking factors in Nigeria, we found out about 70% of the inflation stoking comes from imported inflation, right, and the marginal propensity to import. Therefore, is it the inflation that makes the exchange rate weak, or is it the exchange rate weakness that causes inflation?
The inflation.
Right? So we're not going to go into that argument now. But the point is that if the exchange rate actually appreciates, you might see a knock-on effect on domestic prices. And this is a time when wages have been stagnant. You can imagine when you now have to adjust, right? To this, then you see that the inflationary spiral may just get out of hand. Therefore, I suspect, and I'll be pleasantly surprised if they hold, but I suspect that they would make a move of about 50 basis points as a kind of a midway house.
Abdurrahman, I'm not sure I asked you if what your expectation is, a hold or a rate hike.
Yeah, you did. And I said they are most likely to hold because everything they've done so far is yet to go through the system.
Yet to go through. Okay, so let's talk about developments in the run-up to that have happened. So we had the floods, and then we had that announcement by the CBN to redesign the Naira note itself. Of course, that revelation about that, so 80% of the cash was outside of the banking system. Of course, there was that back and forth arguments about what that means, what value does that have to the Naira. But of course, we know that that could take some liquidity, obviously, out of the system. Just speak to the fact it does not. Your perspective.
As bankers, the amount of money that we have in our vault cannot even be up to 1-2% of the amount of money that we have, let alone at the aggregate money supply. When you're talking about the M1, the M2, I mean, you're talking 60 trillion amount of money. And you're talking about currency of 5 trillion.
No, 2 point something.
Or 2 point something trillion. That is like 0 point something percent. So in a way, I think the emphasis on the change of currency is to address something else. Sincerely, it can be for monetary management purposes. If the central bank wants to handle money supply, and it cannot do anything with the 55 trillion that is within the banking system, which is not currency. And their problem is trying to get the 5 trillion or the 2 trillion, 2.5 trillion that is in the currency. There is nothing, even if you bring all the money back into the system. But I believe you're politically motivated to say, okay, let's try and see people who are hiding money in their vaults and on their pillows,
right,
or in the wells and all that. Yes. You may also try and address corruption, which is also a good thing to say, okay, look, there's been a lot of leakages in the system and people are keeping the money in places that we don't even know. All of that can be addressed. But please, don't confuse it as a monetary policy tool. It is not.
You wanted to quickly comment on that before I go to Mr. Muda?
All cash is money, but not all money is cash. Simple definition of economics. How much in your salary is paid in this country are paid in cash? 2-3%, right? So what do you spend? Is it the cash that the salaries, or is it the money that is paid to you, which is in your bank? So let's not. I think it's a bit. You see, I know that Nigeria is still a developing country, but I don't think we should relegate the country to primitive status. Okay. Right. So
I'm going to have to ask you to hold that. So let me go to go to Muda. Muda, for today's meeting, what comments are you expecting from the CBN, the MPC members? We've heard the IMF say, added IMF for the World Bank say that the private sector interventions that the CBN has embarked on, those interventionist schemes need to end. They're not doing much good. But what are you expecting? What would you like to hear today from the MPC?
Well, what I would like to hear is different from what is likely to be said. You know? What I would like to hear is for the CBN at least to show some empathy to investors in the economy, those who have borrowed money, those who are also seeking to borrow money from the point of view of the high interest rates. I also like to hear a comment from the CBN on how better to manage the exchange rate. But that is not likely to happen.
When you say because, how better to manage the exchange rate, are you talking about that convergence?
Just forex policy, because it's a big issue. It's a big elephant in the room. And how do we, as a CBN, sit to hold such an important meeting? And the biggest issue is not even addressed at all.